Good morning and welcome to the CEFC's Green Room. My name is Hee Chung Sung and I'm the Head of Natural Capital for CEFC, and I'll be hosting this webinar today. Now, before we start, I'd like to acknowledge the traditional custodians of the lands throughout Australia in which we meet today and recognise their continuing connection to land, waters and culture. I'm hosting today on the land of the Gadigal people of the Eora Nation and pay my respects to the elders past and present. Climate and nature are deeply connected, and the CEFC is investing in natural capital assets, including agriculture, to meet our climate ambitions, both through low emissions technology solutions and through land-based sequestration activities. We recognise that the pathway to net zero for key sectors like agriculture is challenging. With that challenge, there are many opportunities to explore, particularly as we compete for the use of our valuable and finite resources to farm them for our future generations. In today's series, we will be exploring the Towards Net Zero Agriculture Pathfinder developed by the CSIRO and the National Australia Bank's low emission farming product, which the CEFC has recently invested $100 million of concessional finance. I'm joined today by Melanie Matters, Director of CEFC, Michael Battaglia, Mission Lead for Towards Net Zero and former Head of Agriculture and Food for CSIRO, and James Bentley, National Australia Bank's Sustainable Lending Director. So some quick housekeeping. This webinar will go for about an hour, including Q&A. We will attempt to respond to all questions at the end of the session. You will find there is a Q&A inbox which you can put your questions in. And of course, at the end of the session, if we can't get to your questions, we will attempt to respond to them on a discretionary basis by email. The CEFC's website also contains the link to the Pathfinder, but you will also find the link on your screens today. So let's kick off with our first question. Mel, can you explain to us what is the Pathfinder and why was it important for CEFC to collaborate in publishing this document?
Yeah, thanks, Heech. So the Pathfinder is a guide for the Australian farming community on how to get onto a low emissions pathway. So we've worked with CSIRO to identify those activities that are evidence-based and practical and financeable. And it's really targeted at, smaller landowners, particularly in broadacre cropping and livestock, who might benefit from a discounted debt finance option to support those activities. And we also were really keen to ensure that it was practical and easy to understand. And so in doing that, we've developed it as an online tool, which is accessible by everyone through the CEFC website. And so that's the Pathfinder. And then, why did we create that alongside, we created it alongside the NAB agri-business loan program, because we recognise that capital is not the only barrier to supporting a low emissions transition. We're well aware that knowledge, know-how and demonstration are sort of key factors as well to enable that sectorial change by demonstrating and creating imitation and innovation in the sector. And so we've combined together essentially two products. So the Pathfinder, which we've developed with CSIRO, sets out, what is good for emissions reduction? What are those activities that will get you onto a low emissions pathway? And then supported by the NAB agribusiness emissions reduction incentive, which provides a 1.15% discount to your term loan for choosing to go down that low emissions pathway activities. And that was important because we were able to blend together the different skill sets to really support the ag sector. So bringing in the scientific knowledge and expertise from CSIRO, and the NAB agri-bankers and their reach and expertise in the regions and with their customers about developing a debt product that serves what their customers need. And then it allows the farmers who know their assets best to be able to determine what will work for their farm operations and their assets, and those tools are available now if they wish to take them up.
And so how should people be using this guide?
It's a reference guide. It has a broad audience. So I'd encourage farmers to review it. It's a free tool that they can review, look at what would suit their assets, what might be implementable within their operations. Within the Pathfinder, there's what we call a farm emission reduction plan template, which has some great framing questions around how to start thinking about your business goals, production goals, sustainability goals. There's also, I think, a really powerful page in talking about the stacking considerations. So when we designed the Pathfinder and the NAB program, it was really through the lens of thinking about whole of farm decarbonisation plans and how farmers can think about their whole of farm long-term plans. And the stacking considerations in the Pathfinder sort of points to where the different activities might have multiple benefits if combined together. I think advisors, supply chain, other parties in the farming sort of ecosystem can review the Pathfinder and see how it may be able to support their clients and support their products and services. And I would say also financial institutions and other agri-bankers, can read through it. It's, as we said, we designed it to be an easy to understand and practical document so that you can start to think about what are those activities which we know are directionally good for emissions reduction, and we want to see more of those activities. And so how can we start to start on the journey towards implementing more of those?
Yeah, great. Thanks, Mel. Michael, I'm going to turn to you, scientist on this webinar. Why do you think the farmers have been slow to decarbonise their assets?
Yeah, thanks, Heach, and welcome to everyone who's joining us. Look, I think Mel started to unpack that question pretty well. So, I think the first thing we all have to look at is, by and large, agriculture's most farmers won't have an obligation to reduce emissions, but they'll be looking to do it either to position themselves into premium markets or to try and deal with value chain requirements. That would be, for most farmers, the only incentive. But of course, most farmers do want to care about the asset and have a stake in the future that we all share. So the barriers that then start to sit into stepping into adopting low emissions practices are, have they got the capital to deal with any additional cost? And sometimes those costs are up front, and the benefits which may flow through either through markets or through aligned co-benefits can accrue over longer periods. A lot of people are pretty uncertain about what's going to work as well. There's this whole, what's going to work in my context, what's trust, where do I get information about this? And so the Pathfinder really tries to start to look at a couple of practices that, we have some confidence about, where there might be barriers to adoption, where we can start to overcome that information deficit or, confidence that this is a good thing to do. And then I think the last bit here is, it goes back to that cost, that benefits from farmers trying to help us meet our national emissions goals and decarbonise or reduce greenhouse gas emissions are actually a shared problem. And this whole activity is formed a way that government, through the CFC, the financial institutions, which has obligations under various instruments and aim themselves to try and decarbonise their assets, can all chip in and form a common effort to help drive the change.
And with that in mind, Michael, I often get asked, I often get sort of asked how we think about the fact that there are so many considerations. There's, quite a lot of science and information out in the market. It's very hard to digest. So how did you think about translating that science into a usable tool and a document, and then, of course, the financial product that supports it?
Yeah, look, you're completely right. There's a lot of information out there, but it's very distributed. You go to lots of points to get it. It often isn't tailored to just the information a producer or a farmer wants, and it doesn't help guide that information into thinking about how does it fit in with what's the main game here, which is producing products or farming. And so what we've tried to do is look at that farmer journey and what they really want to take, and start to align it into the broader business goals, and then have a one-stop shop, if you like, for some of that key information, where it's sort of a fractal resource here. It's got some information in it, but it also helps farmers and producers and supply chain participants to go to supplementary sources of information. So simplify that job when you've got a really busy other job. But there's also this piece here that sits behind this, which is trying to think about what do we really need to know to make sure we nudge the whole system in the right direction as well. And so the information isn't as comprehensive as is in some other sources, but it provides enough evidence base to make sure we're doing the right thing as well, without going too far into the detail.
And I guess we're talking about the ag sector today, but you've got a bigger mission and a bigger task as part of your job at CSIRO, which is around the broader sectoral pathways and how it fits into the net zero mission for Australia. How do you think about the Pathfinder's contribution to the broader sectoral pathways?
Yeah, agriculture's, as you know, about 17% of Australia's greenhouse gas emissions, but it plays an absolute key job in providing food and products that drive our economy. It's going to be an increasing source of contribution to the future bioeconomy through fuels, through offering opportunities for sequestration. So what we really want to ensure is that we can start to look at how that land sector can do the obvious things, the easy things to reduce emissions, so that we can then focus on the rest of that problem in different ways. There's a really key part that the Pathfinder is trying to do, and it starts to lead farmers to explore their baseline, to start to think about their future trajectory, which creates a learning opportunity around, well, where are my emissions on the farm, and what might a longer term plan look like while I'm adopting these easy and immediate things to do. So collectively we can focus on the residual or the opportunity, and then look at how that aligns to broader business goals and opportunities. But in all our journeys in decarbonising the economy as a whole, we have to confront those issues of how do we generate the revenue base to overcome green premiums or additional costs? How do we align those activities to other things that we know we need to do or we want to do? And in this case, on the farm base, it's around building farm resilience, meeting other farm goals. But that could be equally said in other sectors.
Yeah, that's really interesting. You know, we're talking about markets responding to best practice or decarbonisation, activities that farmers may undertake. So it's a good segue to James and the National Australia Bank's interest in a low emission finance product. So James, what's on offer for farmers?
Hello everyone, and thank you very much for having me today. I'm joining you from Wurundjeri country today. So look, the offer that we've been able to bring to market we think is awesome. We hope is awesome. It's a 1.15% discount on term loans for eligible activities. Now, there's two funding structures available. Now, the first is, as you might expect, so the farmer will take out a loan for one of the eligible activities that has been, I guess, predefined under the scheme. And, 100% of the funds must be used and allocated towards that project. And this is things like, investing in putting legumes into pasture or solar battery systems on farm or even eligible ACCU projects. The second structure, and I think, when we were thinking about the design of this initiative, and I guess that question around decarbonisation, and I think, we were very conscious of the challenges that Michael raised around, that essentially when we look at agriculture, the big rocks are methane emissions, nitrous oxide emissions, and, there's an enormous opportunity around sequestration. But a lot of that opportunity in the sequestration space is small-scale stuff that's, frankly, delivering a lot of value on farm in terms of shade and shelter or protecting waterways, but is too small to justify putting into an ACCU project. But regardless, if you look at that cumulative opportunity, lots of small projects across many farms is quite substantial. So we were looking at those options, and Michael mentioned the sort of commercialisation challenges that these sorts of initiatives face, and that led us to think through, well, how could this this initiative, I guess, support farmers to I guess invest in those activities and without and I guess make it easier for them. So Structure 2 that is available is somewhat novel in the market. The farmer can finance or refinance up to $5 million of standard farm debt at the discounted rate. And over the course of a year, they'll save, if they've borrowed $5 million, about $57,500 for the year. They in turn agree to spend that money on one of those eligible activities. So this is taking away some of the financial burden to enable them to look at the practical application of these actions on their farm. We hope that this is a way of helping farmers to are interested to get started and to really start, I guess, learning by doing about how to solve some of these, commercialization challenges around that tech. So that's the offer. And of course, we also launched in parallel an equipment finance discounted loan, which can support, customers who are thinking about, I guess, the upgrades of equipment across the farm, things like electrification or efficiency in their machinery.
Yes, thanks, James. I mean, I think what's really exciting about this product is that it is first in the market that specifically addresses low emission farming as a product. And so we're excited about that. And how, I guess for a bank, and you've had green financing products in the market from time to time, why was this product important, and what was some of the additional thinking that had to be overcome through the bank?
Sure. I guess, the context here is that, we know that, I suppose in terms of the decarbonised space, agriculture is, it's quite stark in terms of the risk and also the opportunity that the ag sector faces through decarbonisation. And, as a financier, we are always interested in helping our customers to better manage risks, but also to take advantage of opportunities in this space. And so, the fact is, it might not be all farmers, but there's, an enormous cohort of the farming community who are constantly innovating and experimenting around, particularly the climate adaptation space, but certainly the emission space as well. And having this product ultimately helps us to better serve those customers. And talking to many farmers, they're I guess they're stuck in a bind, and we have, I think, collectively this challenge of how do we sort of lean into the fact that there are likely to be additional costs to really cut emissions of methane and nitrous oxide in particular, and socialise that across supply chains. And Michael talked about this sort of nudging people in the right direction. I think an initiative like this can really be a catalyst for change, because it allows those supply chains to, a lot of supply chains are sitting there. There might be a milk processor saying, well, I really want to build out a supply of low methane milk and put it into the market to test it. But what have I got to engage with my supply chain to get that on-farm action that I want to see? And this initiative can I guess, help get started, and is something that hopefully can help to, I guess, allow the doing to happen, so that we can solve some of the supply chain and marketing issues along the way. I guess that's I guess we were always comfortable with the market demand side. The challenge for a bank introducing a new product are many. And, certainly, this took a lot longer than we might have hoped to bring to market. The CFC were a wonderful partner, but certainly may have tested their patience along the way. And, this speaks, I guess, to the challenge of, introducing products in this space to market. And for us, I guess bringing a proposition like this to market sounds very simple. It's just a change in the interest rate for the loan, but with that come enhanced reporting requirements, enhanced due diligence, and the lending process is surprisingly complex, and we really need to be across the weeds of how that process operates and how we manage risk across that entire process, to make sure at the end of the day we can substantiate how that money was used, what it was used for, and what the benefits are. And that's required an uplift, in our internal technology and capabilities, to bring this proposition safely to market.
Thank you, James. And, it's interesting, you talk about sort of this product design being, partly facilitated with some feedback from your clients and your customers. Have you had some initial feedback for this product since it's been launched about a month ago? It's been in the market.
Look, I think there's been an enormous level of interest, and it is exciting. And I think for those of you in the product space out there, the thing about having a sustainable product is that it creates sort of an excitement funnel for all the amazing things that are happening all the time out there that you're ordinarily not aware of. And I've been I guess there's lots of inquiries from bankers from all over the country. They've reached out to their customers, and I guess that conversation is quite interesting, and it does speak to the sort of the role that this type of proposition can have in market. I was speaking to a farmer yesterday who sort of, they already have quite a sophisticated plan around the things they plan to do to reduce the emissions out of their beef, system. Methane inhibitors weren't on, that priority list because of their uncertainty around the economics. And having this initiative, they're suddenly saying, well, maybe, I can try this out. That's great. And, it's not just, I suppose the other thing about, this initiative, whilst CSIRO have framed a short list of eligible activities, we're open to the weird and wonderful. And so we're getting a lot of, what about this? I'm looking at this, will this qualify? And that's really exciting, because, you get to see there's more than one way to manage this issue, and farmers, are well known for their innovation, and we're starting to see that come through as well.
Yeah, that's fantastic. And so, you know, we've got a financing product to support the upfront investment potentially on some of these activities, and a document that can help farmers to start thinking about a plan, I guess, for their farm. And just with that in mind, Mel, you know, it's a large document. It's got some really great information in there. If I'm a farmer and I'm thinking, oh, I want to have a look at this document, how do I start thinking about my farm in the broadest context of, you know, a low emission plan? Is there something in the document, in the Pathfinder, that can help me straight away?
Yeah, absolutely. So I think as I said, it's an online tool, so it allows you to really easily navigate between sort of what is of interest and importance to your actual farm assets. You know, it's there so you can, I think, go to the FERP template and start to think about those framing questions for how to start thinking about what your business plan is, what your long-term goals are, sort of picking up on the comments that James and Michael have sort of said already, that it is to start getting you on that pathway towards what is a low emission whole of farm sort of approach. As I said, the stacking pages, I think that's an incredible resource to be able to see how you can start to combine different activities together. And I think, to sort of Michael's point, you know, in making it sort of accessible and practical to use, we know that there's the scientific rigor behind it, even though we don't sort of step through all of the detail on the online version, but by having CSIRO sort of develop the Pathfinder, it is backed by that evidence. But I would say it's a start. So this is the beginning of the journey. It's a really good first step forward. We've got this list of things in there at the moment, but we will be continuing to sort of review and refine it. And so we'd absolutely welcome feedback from farming communities and farmers as they start to navigate through the Pathfinder and we start to learn what will serve the farming community better, because we really see this as an evolution and as a journey. You know, CFC's role is unique and important in the market, where we can try to bring together both the capital and the know-how to accelerate the sectorial change. And so we're looking for, you know, we're open to getting that feedback on what farmers are finding as they navigate through the Pathfinder, and how they can, you know, what would improve it even more. There's also a page, two other things I'd point out from the list. There's estimations on avoided emissions. So at that first step, you know, you may not know exactly, if you haven't started a baselining or know what your emissions are, there are some calculations in the Pathfinder that help you to start to estimate what the avoided emissions could be. It's a really good way of starting to develop a proxy and a feel for what is your emissions footprint and sort of where those activities are that can really serve to bring your emissions footprint down. The other is there's a page that we link to some state and federal programs and other resources that are available. You know, and I think that as more information and more resources become available, we can start to cross-pollinate across different programs and different, you know, depth of information to create a real knowledge base, I guess, for the farming community. And farming community, I mean farmers, as well as all the supply services and advisors and bankers and financial institutions servicing the farming community. So that whole ecosystem of services, so that we can start to, you know, get that consistency of information around, these are the things we know are directionally good, and let's try to do more of the good things.
Yeah, so obviously things will evolve, technologies will develop. And I think about that from the perspective of how we plan for the future. And Michael, you know, when you think about a net zero pathway, and we deliberetely designed this as a pathway, not a hard target kind of, you know, structural document, because there will be many pathways for different landowners to get to their climate targets. How should farmers think about what does a net zero farming plan look like, and how can they utilise the Pathfinder to help them think about their pathway to that net zero ambition?
You know, I'd even go back a step further than that, Heach, in that a farmer may not want to think about net zero. That may be a goal that's particularly hard on a particular enterprise. But we might want to think around net zero agriculture on aggregate, and how does Australia's agricultural lands and assets help drive a net zero economy. But the individual farmer may have very little option around getting to net zero, but many farms can adopt practices that either reduce the total emissions from the farm, or even potentially reduce the emissions intensity of products. That is, the amount of emissions a farm produces in producing the products it has. And Australia already has some of the most efficient farming practices, greenhouse gas efficient farming practices in the world. We know our broad acre wheat farming, for example, is either the best or close to the best in the world. And we know our livestock production systems are, on par with best practice in the world. But of course, the world's not staying still, and there are, particularly in some jurisdictions, there's pretty strong incentives to try and reduce those emissions. But if I'm a farmer and I'm thinking about that journey, I think the first thing is you've got to know where your emissions are coming from. And that's what the farm emissions reduction plan and the baselining are designed to do. Identify where are those sources, and then think about which ones will the reduction of either lead to overall farm efficiency gains, things like variable rate fertiliser, variable rate liming over the long run can really support gains if you can overcome the upfront capital costs. In many cases, putting vegetation back onto farms can actually reduce some externalities, providing shelter for stock or reducing risks of dry land. So there may be alignments with farm production goals. So you start there with the easy things that align with farm production goals, knowing that there's some parties like the NAB and other financial instruments around that can potentially support some of those goals in the long run. Then as farmers and markets start to evolve, clearly understanding where the emission sources on the farm are, start to allow you to progressively step through those to make sure you stay at the forefront of best practice, gaining access to markets, supporting extended value chains that may have obligations for reduced scope 3 emission sources. So know what you've got, look at where the early gains with some support can align with farm and production goals, and then have a longer term plan to make sure you stay at the forefront.
Yeah, and that's really good context. And some of the sort of the questions I've received today around the Pathfinder is around, well, does this Pathfinder give me the tool to measure my carbon profile on the land, or how does it relate, or how does it operate with other tools in the market? Could you give us a little bit of an overview on how you're thinking about that?
There are a range of supporting agencies, particularly the states have backed in very strongly in supporting farmers and understanding options within those geographies. And then there are private market tools that are available. The Pathfinder doesn't prescribe any of those tools. It provides access and guidance to some of those resources that farmers and producers might choose to use. And in many ways, a lot of those are founded on very similar principles. So the farmers and producers in the Pathfinder manual are recommended to look at the one that's accessible and suits their enterprise needs and has the right entry point for them. The critical thing here is just starting to get on top of what are the sources of emissions on the farm, whatever tool you use. And for the Pathfinder manual, it's not that important to get it 100% right. Just getting a general knowledge of what's going on so you can start to make positive actions is what's required here. Of course, there are other markets, ACCU markets, formal trading markets that will require the use of specific tools and very formal approaches. and that will start in that way to enter into potentially a different range of gains and benefits. This manual is not directed at that market. It's just to help people start the course, start to adopt practices that we know that the evidence is overwhelmingly supportive of being in the positive direction, and where we think some additional support might overcome some of the barriers to adoption.
Yeah, great. And maybe just switching focus a little bit to the financing sector, and maybe this is a comment for James and Mel. I understand that the Pathfinder elements of the Pathfinder have been adopted by ASFI in terms of their screening process for their taxonomies. Could you speak to a little bit about that, Mel and James?
Yeah, I'm happy to talk. So, yeah, the Pathfinder is a complementary tool for the ASFI Agri taxonomy, or the technical screening criteria. So through the Pathfinder and through the work that CSIRO's put together, we've been able to define some parameters around the different emission reducing activities. And in the Agri technical screening criteria, you'll see a lot of alignment between those criteria. Because I guess both are essentially trying to classify or create a list around what are those activities that can be done on farm to address and reduce emissions. And so an important part of the taxonomy work and an important part of where things are moving is around getting that consistency over the identification of what are those activities that can be done on farm. And I think both the Pathfinder working, complementary to the agri taxonomy that's in development is a really great signal for the farming community around what is those activities that we can know have good emission reduction benefits on farm, as well as productivity and resilience and competitiveness and profitability. So I think that's a great impact to be able to start to get consistency, so that we are all sort of working off the same list and classification. James?
Sure. And perhaps that consistency I think is really important from our side, especially when we're thinking about sort of the long-term structural sort of incentives in embedding this in the way we do business. And one of the challenges for agriculture is that I guess those consistent frameworks through which the sector communicates sustainability, climate risk, they're still evolving. And certainly what has been developed through this initiative, it's got some way to evolve, but it gets the ball rolling around I guess how that communication, how that reporting, how quarantining, and defining, I guess, green eligible activities in the context of sustainable lending can be done. And, I guess that has, to the extent that we're successful in that pathway, that enables us to, I guess, identify this type of lending as green lending, and therefore it can feed into, potentially into things like green bonds. It can also start to, I guess, better define and improve the way banks start to assess, things like climate risk, and hopefully over time that'll start feeding into things, like credit risk and I guess those decisions about, I guess ultimately, how do you allocate more capital safely to this sector. And so there's, the long-term goal here, I guess, is to build out that consistency in communicating about this transition, so that we're better placed to support it. And we're certainly seeing in other sectors where, there's more maturity around, the communication frameworks, like the property sector, for example, that opportunity to align sort of, green lending and credit is really starting to strengthen to better support, transition activities in that space. And it all comes down to having really consistent, clear reporting frameworks to enable that to happen.
Okay, great. We've got 20 minutes left. We've got a number of questions that have come through. I might start going through those questions, given some of them are very sort of relevant to the kind of discussions we've had to date. One of the comments and consideration for us is, and working with farmers and landowners across our investments, is that, there's a lot to do on a farm. 24 hours a day, there's just a lot of work to do, and you don't have endless resources. And so there's already a lot of work and paperwork that farmers have to prepare. There's obviously a lot of technology that they have access to now compared to maybe, 2 decades ago. How can I leverage the documents, or how can I leverage the information I already may have on my asset? Maybe it's a question for you, Michael, to think about as well. How can I make my life a little bit easier with the information I already have in putting a low emission farming plan together?
I'm not quite sure what the question is, but I think if farmers already have detailed asset information or have started to deal with other sector-facing emissions reduction planning tools, then a lot of that information either is, can be included in whatever the supporting documentation is required for this loan, or, depending on, and it's not a question for me really, it'd be for James or for yourself, around could be used as an alternative framing if it covered all the requirements. But I think the key thing here is a lot of the baselining and emissions reduction planning here. The intent is to get a conversation and some thinking around those objectives as the primary thing, as a part of how we think about our longer term asset management, rather than, it's not a piece of homework to be ticked and flicked and corrected in that way. This is an important part of managing the asset base we have. So if you're on the way in doing that, that is fantastic, and you should be well positioned to start to think well about what are these current suite of eligible activities that are envisaged in this scheme can support that runway you have, and then also around what other activities that aren't in this scheme but may be supported through other mechanisms can be adopted.
Yeah, that's a great way to think about that. And sorry, Mel, yep.
I was just going to add, I think we also, in terms of the FERP template, we kept it so that it is a lot of free text, so that it is really deliberately designed that way so that you can adapt it for what your needs are. So for some, it might be that you're already a long way down that journey, and so it's really just a sort of sense checking of what you're already doing in a validation. For others, it might be the start, and so you can sort of dip in and out of the Pathfinder in different parts. I think there's a page on what is the value of doing a GHG, a greenhouse gas baseline, and I think that's just a great sort of entry point to start thinking about the why as well as the how to this. And I think that's sort of the strength of the Pathfinder, is that, as well as the way it's set up online, is that farmers are able to dip in and out of the parts that are relevant to them, and at the point where they're at in terms of their emissions planning.
Yeah. And James, if I'm a farmer and I'm looking at this document and I'm speaking to my banker about, potentially participating, in the end, what do you think the commercial benefits are for me to participate? Because, there is obviously, to Michael's point, it's good asset management, it's good risk management, we do need to be long-term stewards of these assets where, you know, they're valuable and they're finite, as I pointed out earlier. But sort of short to medium term, what you know, are there commercial incentives? Are there potentially price premiums you're hearing about and you're seeing that, you know, would make me want to participate sooner than later?
Well, there's a lot there, I think, because, you know, every farm is different is one thing to say. And so, and I get back to that sort of observation that, you know, a lot of farmers are already thinking about sort of these, you know, climate risk in particular. And, you know, like there was a story last week about a farmer who was, you know, unfortunately, you know, gripped by drought out west in Victoria here, who's sort of digging up some silage they buried 3 years ago when times were better. And, you know, it's just a reminder that, actually another even weirder story, I was chatting to a banker a couple of months ago and she just mentioned something about a customer's, you know, climate risk fund. And I was like, what? We don't have like a climate risk product for our customers. I was sort of, what is that? And she said, oh yeah, it's a share portfolio. We've provided them a loan to invest in shares, so they've got off-farm income, you know, that helps to smooth out their revenue. And it just is I think a reminder that the innovation is sort of out there, and there are already commercial drivers here. But there's also, you know, there's personal drivers. Like a lot of farmers, you know, talk about wanting to leave land in better condition and than when they found it, and to protect the natural capital base of the asset. But those, you know, I think the thing about commercial drivers and why they're important is because, you know, agriculture, it's a commodity, it's cutthroat, and cost, you know, every farmer is day in, day out balancing, you know, their costs and returns. And, you know, it is a fine balance, and you throw climate risk into it. You throw bureaucracy and admin into it, and then it becomes all the more sort of challenging. And that's where, you know, I guess those commercial drivers certainly need to strengthen to enable, you know, I guess the deep decarbonisation that we hope to see in this sector. And, you know, and I suppose what we are seeing, and it's, you know, I don't think we've seen anything at scale yet, but one thing at scale that we all need to be mindful of, you know, you look around the world at the agricultural supply chain and the commitments, you know, that large organisations have made around Scope 3 emissions. And, you know, they all want to reduce emissions of the produce that they're buying. And whether it's, you know, Asahi in Japan, or Yum Foods, or Nestle, or Unilever, or, you know, the McDonald's, you know, all of these organisations working on challenge. Have they all got it right yet? Do they know how to do it? You know, lots of problems to be solved, but I guess, you know, that creates the opportunity to make it easier for them, to show them how to do it. And I think that's something that farmers are very good at doing. But of course, you know, there are constraints, and if there's no price premium out there in the market, then, you know, how do they cover the costs of that transition? So, you know, I think there's lots of innovation and experimentation happening in the marketplace, but, you know, there's bottlenecks in the system, right? There's, you know, shared silos and, you know, shared distribution systems, and I guess those networks are complicated, and so solving them, you know, is not a linear process for all farmers, and others have better opportunities that they're starting to explore.
Thanks, James. And, you know, there is a question that sort of relates to what you've just said, which, you know, investors and stakeholders, are they requesting emissions reporting? I mean, Mel, I'd like to hear your thoughts on that. There seems to be I guess, an increase in appetite for emissions reporting from various financial institutions and investors. Have you observed that increase, or do you think it's something that people are exploring, but it's certainly not mandatory at the moment?
Yeah, Probably start first by sort of saying, I think, you know, the benefit of baselining is just being able to understand your assets better and being able to make more informed decisions, both from an emissions point of view, but also I think through the process of, you know, analysing and thinking about sort of the different elements of your farm production. It's just a grounding and a sort of basis for starting to look at, you know, what activities you've got and what their impact is from an emissions point of view. I think from a, you know, there's certainly a lot of sort of drive to get more emissions data and tools and reporting coming that's developing. So I don't, maybe James can jump in here in terms of what they see in terms of requests, but I think it's certainly growing and something that there's value beyond just the pure sort of emissions, getting your emissions data, being able to play into markets and being able to demonstrate what your farm is doing from both an emissions and a production outcome is a good thing.
James, do you have anything to add to that?
Oh, not, you know, I guess it's that old, you know, you can't manage what you don't measure. And so, you know, that is the starting point to, I guess, understanding where the opportunities are. And I suppose it's, you know, I know there's various stakeholders out there and, you know, that are really trying to focus in on at the moment, you know, where the, I guess the nexus between productivity opportunities and emissions opportunities lie. And that's something that, you know, can come out of that baselining work, particularly when you're able to, you know, I guess, incorporate the baselining into broader sort of benchmarking activities that are ongoing in your region. And, you know, we are seeing certain pockets of that starting to happen, like a lot of the agronomists or accountants who support farmers are starting to build, you know, emissions modelling capabilities into their services to farmers with a view to sort of, you know, but it's still, you know, still early days.
Yeah, and with that in mind, I've got an interesting question, and it's really one for Michael. So, and this goes to how those activities in the Pathfinder were selected. The question is, you know, what are the risks for farmers if the carbon reduction efforts aren't effective, or that the science is updated, which, you know, changes a whole bunch of stuff? So how confident are we with the science to date and what you've put into the Pathfinder?
Yeah, it's a good question. I was just typing an answer to the recipient just as you spoke. Look, you know, the Pathfinder has selected activities around which we have good evidence. So, you know, we start with a reasonable level of confidence on those. However, of course, stuff happens. We discover additional things along the way. In terms of the Pathfinder and the, I think where the NAB is going with their discounted interest rates loan scheme here, but the activities are monitored on were the activities actually carried out. So at that point, if we all go, oh, we've made a mistake, then we would naturally look to refine the advice we give, and maybe, you know, financial entities might remove those as targeted activities. In terms of how those matters are usually treated in things like ACCUs and other markets, the benefits are usually grandfathered through, so you get whatever rewards were assumed, but then the national accounts are revised to deal with it, and we move on. So we tend to be very conservative and sure when we recommend practices, but then if we discover things, we go back and retrospectively refine our national estimates of emissions reductions, but the rewards or payments after that date are usually honoured in schemes. So in this case of this product that's been talked about here, I don't think it's terribly relevant because it's on activities delivered. In terms of the entities here, maybe wanting to put their fingers on achieved abatements as a result of investments, they would then have to go back through and revise it themselves if they're making claims around the difference they've made, would be how I'd say that one would work.
Mel, do you have any thoughts on how the key activities were sort of conceived, why you've chosen those?
Yeah, I guess we thought about, so we approached it sort of from the ground up. So the thoughts were, what are those things that we want to see, more of? So baselining was important because starting to understand where the emissions are, and therefore also what are the low-hanging fruit. So where are those activities so you can focus more on that's going to have the bigger bang for buck, basically. And then we sort of know that fertiliser, methane, energy use and tree planting are sort of the, key drivers of abatement and sequestration in natural capital assets. So we really wanted to hone in on those sort of hero activities, essentially, to say we know that if we focus on those that we're going to achieve some good outcomes. So that was sort of the conceptual sort of idea around, well, what if we identify those activities that have got good emission reduction outcomes and that are able to be implemented, how then do we design a debt product that can support those farmers that are wanting to do more of that? And the discounted interest rate was there to address that economic barrier or cost impost that often comes with selecting those activities. So that was sort of the genesis for the Pathfinder list, coupled with the NAB program. And I guess in thinking through those activities, we've really sort of tried to as well bring a level of practicality to how you can think about those. So if you read through the Pathfinder, you'll sort of see we've set out in relation to fertiliser, like what are the ingredients and what are what would be the product that you would be starting to see if you're going for that nitrification inhibitor fertiliser. On the methane, we've put some thresholds around methane inhibitors and so you can start to, develop that criteria, and that's what's then being picked up in the ASFI taxonomy around technical screening criteria, because it was important that we made it not only recognising what are those activities, but also practical to implement, because the idea is then that through the NAB program, farmers, agribankers, advisors to those farmers are able to then read it and understand, okay, this is what I need to do on my farm, and if I can do these things, then I should be talking to a NAB agribanker about how I can access this program.
Thanks, Mel. In the time we have, maybe one final question. It's a really interesting question. In developing the plan or application, someone has asked, sort of commented, it would be easier for a farmer to adopt another farmer's plan potentially, or at least work off someone else's plan or components, particularly if it's been successful. Is there a forum, do you think, where farmers can share this information? I mean, I think it's probably maybe for you, James. How do you think, is there a forum that your bankers can, share information? It is an interesting thought.
Oh, I really like that thought. I don't have a clear answer yet, but I mean, certainly, there's a hands-on approach to supporting our customers with this initiative being new. And so, they're all hands on deck to support them through this process. But I really like, the idea of a farmer forum. And maybe it's not NAB, maybe it's someone else active in the space, better able to engage around this type of stuff. I really like that idea.
Yeah, I totally agree, James. I could imagine, state farmers federations might host that sort of activity, or even support groups like Farmers for Climate Action might actually be an ideal place to host some of that information.
Yeah, thank you. Look, we've 1 minute to time. I guess, first of all, thank you so much to the speakers for their time and insights on the Towards Net Zero Agriculture Pathfinder today and the NAB's low emission farming product. There's a lot to unpack, and there's probably more questions that that can be answered over time. But I think just key highlights for me and key takeaways. This is a evolving document, the Pathfinder. It is not set in stone, stuck in time. And it is, it's a good start. It doesn't cover every scenario, but it covers, quite a lot of the scenarios in farming systems and production systems that occupy our landscapes. I guess the other observation is, for the bank, this is a first of its kind product. It's very focused on low emission farming. So, I think it would be great to get over time some feedback and potentially another webinar to see, what has worked, what hasn't worked as the product develops. And I think the Pathfinder being a standalone document for me is exciting for the land sector. You don't have to necessarily take up a loan. You can actually use the document as a start to think about your planning, to address climate challenges. So they were my high-level thoughts. I don't know if any panelists have any other lasting comments you'd like to make before we hop off.
Maybe just a quick one. I think just to echo that, and that the hard work starts now. Like we've had a painful year getting this through to market, but really this is where we learn by doing. You never get a product right when you get it straight to market. You've got to be hands-on, evolving, and that I think is what we need to.
Right. Yes. The hard work. Yeah, I think it's good to point out that this wasn't an overnight, product that was dreamt up in a few weeks. This was a, hard, thought through from both science and finance, which is why that collaboration was really exciting. And for everyone on this call today, please, there is a survey at the end of this webinar. If you could spend a little bit of time in completing that would be great. These webinar series are for us also, a forum to be able to share what we're doing and to bring in experts into these series. So if you have any thoughts about that would be great. But anyway, thank you so much to everybody who's dialed in and taken a good hour of your day. Wishing you all the best, and thanks for your time and participation.